Good morning, everyone. Welcome to Eastern Time, 12 p.m. BST. Every day of the week, we discuss all things to do with the modern market. That is the crypto market, the NFT market, and the USDT Tether balance sheet. That's what we're talking about today. The best crypto business in the world. We've said it on this show before. We will say it again. All kinds of interesting details coming out about the stablecoin business, about with Tether specifically. So we'll get into all of that and more in just a little bit. As always, I'm your host, BCheck. I'm joined by my legendary co-host, Sammy, today. And as a reminder that nothing that we say here is financial advice, because ultimately we do not know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Sammy, it is Thursday. It is the 1st of August. How are you doing? How are you feeling?
I'm good. I thought you were going to miss the disclaimer then and get a little bit concerned.
Nope.
Yeah, no, it's good. It's almost the end of the week. Beautiful weather here, so hoping to make the most of that, but also locking in that limbo at the moment, trying to work out what to focus my attention on, but also trying to make the most of summer. How about you?
I loved how everyone, the market is just, and look, ultimately, if you zoom out, we've kind of just been ranging for absolutely ages. But I love how we just went down after everyone, after the conference just got so insanely bullish, and then we've just gone down again. And the thing that I was thinking about a couple of maybe a week or so ago, or 10 days ago, when everyone was, I mean, we literally flipped. There was one period of time about a week and a half ago where people flipped entirely from bearish to bullish. There was when we would dip down into that 58K region for Bitcoin, and then that people were like, oh no, it's going to lose this area or whatever price it was. I think it was around 58, and people got exceptionally scared at that point. Then everyone, as soon as we'd gone back up to 64, was like, right, it's done. Bitcoin conference is coming. Trump is going to pump the markets completely, and people were completely sold on that. And we've obviously just sold off a little bit more. The thing that I was thinking a couple of weeks ago when that was happening was that there's still a long time of the summer left. And I know that there could be actual specific news stories that are kind of introducing a little bit of tension into the market, specifically some of the stuff going on in Iran, for example. I don't know if the market necessarily cares about that a huge amount, like it might have done a couple of times before. But I know that's one thing that's on people's minds. Obviously, the stuff going on in Russia has kind of been going on for a long time. And then on top of that, you've got the US political situation where these odds for Kamala coming in just keep flipping in a way that is definitely introducing a layer of risk. Let me see how to phrase it. A layer of uncertainty for the people who thought that Trump, who they think will be pumping Bitcoin, just a layer of risk or uncertainty for that particular outcome. So I actually think I'm leaning more to the final one there, which is why things have got a little bit more uncertain at the moment, but also all in the backdrop of we're still in August. And so I'm not entirely sure that we move aggressively when we're in the summer, irrespective, even if Trump, even when all that news came out on the weekend about Trump saying all that stuff he said, still only got to 68 or 69 or whatever. And then we stopped there waiting for more, right? And the point is we're in August, so that, or just July, 1st of August today. You're not going to get more at this time of the year. What are your reflections on some of that, those initial thoughts, Sam?
Yeah, I certainly don't think I'm going to start FOMOing him based on news, because if you look at the last three tops, I think that it's pretty much been when the bullish news has been at its highest. So it's definitely like a sell the news event. But I do think that a lot of these things, that these news articles and things coming out from like the headlines, I do think a lot of these things are structural changes that take time to come into fruition. Like it takes a lot of, like, for instance, like the ETF flows, like Ethereum, Bitcoin, like a lot of these institutions, it takes time for them to get the
Sure.
the governance in process, all that kind of stuff. It's not going to happen overnight. Yes, there'll be like instant buy pressure for stuff that news that breaks, but it's just going to be from the CT bubble, which isn't a significant amount of liquidity. if we're talking about trillions, like multiple trillions from institutions, pension funds, stuff like that, I think that's going to take a lot more time. So I'd be looking at 2025 onwards realistically, which is why I'm in no rush to make sure all my bags are packed. I've got some of them packed, but I'm just happy there, just enjoying the summer. And I think we'll see some action, some volatility in the latter half of this year. But 2025 is when I've got pegged for some actual action.
Fair enough. Yeah, I think, this region, as you said, like we're just in a kind of wait and see region. I think people are getting too emotional, particularly over the summer. So we'll see how that goes. To your point about Bitcoin in the summer, or to my point and your point, we've got some interesting data that Tyler shared from yesterday about like when Bitcoin every year kind of performs best. And so we'll get into some of that, try and do some astrology for men and women who are in crypto in just a moment to see where Bitcoin will go in the next couple of months. But look, let's get into the market as always. As usual, we will do the price action, we'll do the headlines, then we'll get into some interesting discussion points for the day. Then we'll get into the bigger discussion on the key headlines from the snapshot, which is pinned up top if you're watching, if you're listening in on X. If you do find it brings you some value today, please do give it a like. If you are if you're watching on YouTube or X live, enjoy. I'm going to be sharing the screen for you. Here we go. Let's do it. Starting with some price action, we have Bitcoin down a couple of percent at 64.5, ETH down almost 4% to 3.185, Solana down almost 7% to $168. Meme coins across the board seemed pretty far down. I reported on this a bit later in the snapshot today. Meme coins hit across the board down on the day. WIF was down 13%, Pepe down 7%, Mog down 12%, and Popcat down 14%. Nero, interestingly, on ETH, after all the Nero battles going on Solana, remember this is the meme coin of the new dog from the previous Doge owner, was up 60% to a $180 million market cap. I believe it's gone even higher since then, and that was on ETH. So maybe there's a lesson in there or where you should be putting your liquidity, or which groups of people are able to pump and sustain something. Let's get into the headlines. Headline of the show, I think Tether stablecoin provider USDT announces $5.2 billion in profit in the first half of 2024. We'll get into some of the numbers in just a little bit, but some key ones just to start off. 1.3 billion in net operating profit, 520 million increase in Tether's group owned equity, bringing it to a total of 11.9 billion. 5.3 billion in excess reserves, more than 97.5 billion in US treasuries, 7 billion increase from the previous quarter, a new all-time high. This achievement brings Tether's exposure to treasuries above Germany, the United Arab Emirates, and Australia. Like Tether has greater exposure than a number of significant nations now. While China and other countries have been recent net sellers of US treasuries, Tether positioned itself as 18th in the rankings of countries owning US debt. Tether is on the nation's ladder at the moment with the way that they've been accumulating the treasuries as part of providing the USDT stablecoin. We're going to break down that some more and look into Paolo's tweet, which is very, very interesting in just a little bit. Next, Matchy launches meme coin backed by Bored Apes. You could mint 100 million BAYC tokens for each NFT. There was a funny thing that happened. I don't know if it's that funny for the liquidity providers, but someone bought 2 Bored Apes off the floor and sold them into the new protocol's liquidity for 48 ETH 5 minutes later. Because you know how when you set up these liquidity pools, it obviously wasn't done to correspond with how much the Bored Apes actually cost. So when you deposited the NFT, it was possible to get an amount of tokens back, which were an equivalent price that was way, way higher than what it should have been. So interesting to see him try to fractionalize that. We'll touch on some of the details there a little bit too. And finally, on the more traditional side, insurance from 3-century-old insurance marketplace Lloyd's of London comes on chain. CoinDesk reported that the cryptocurrency insurance underwriter Evertas, a Lloyd's cover holder, has teamed up with smart contract-based insurance marketplace names to offer their on-chain policies. What we're enabling is for people using blockchain infrastructure to interact with highly regulated traditional fiat-backed institutions in a way that is seamless. So you can use crypto whether that's USDC or native crypto, to place policies completely on chain with the blockchain, helping coordinate between a broker, the insured, and the insurers. Sammy, I know you were in the insurance market at one point. I was actually in the insurance market at one point too. Look forward to discussing that with you in just a little bit. In terms of some notable sales, we had CryptoPunk Purple Hat selling for 35.75 ETH, CryptoPunk Tiara selling for 36. This big secondary sale for Joe Peace opened the floodgates. 34.05 ETH. Digital art is still alive. Interesting story on this one. I actually helped broker this. I was one of the brokers on the seller's side. I was working with a broker on the buyer's side, and it actually went to Cosimo Di Medici. So big sale on the digital art side. Congrats to everyone involved, buyer, seller, and Joe, the artist, who is routinely selling these pieces for about 50 something ETH on primary, and getting a healthy resale on secondary too. That is the price action. Those are the headlines. Before we get into a bigger discussion, into the discussion points and the headlines themselves, Sammy, is there anything catching your attention in the NFT market? We're going to head over to our NFT marketplace partner, Mintify, now.
Yeah, so on the ETH side, I guess there's a couple of things that stood out to me. I think we'll probably touch on the meme land stuff later, which I think based on this, it's obviously perceived as being positive because you kind of benefit from holding those NFTs to stake them. So that's good to see. But just on the art side as well, we've seen some like a Beeple sale recently. Now I know these are like there's not that many in the collection, so one sale can pump the price. But
Sure.
I had a look to see where this went, and it went to a wallet with a couple of X copies in. So I think we've touched on this previously, where you've got Beeple and X copies seem to be ones as being picked as like the OGs in the space that has that cultural significance. So I think that's just interesting to note.
Yeah, very, very interested to note. Yeah, I'm always alive to the art stuff, to be honest. I really like the art stuff. When people ask me what I think about the NFT market, I think digital art is still one of the most clear and obvious fantastic use cases moving forward. No, that doesn't mean that every single piece of digital art will be able to be sold for a huge amount, but I definitely think that there will be certain pieces that will go for, will continue to go for huge prices and go for even higher prices in the future at some point. So I like that perspective too. Shout out to Funky in the comments, just said, we just interviewed Dan Roberts, the co-founder of Names, which is what we just referenced when it came to the insurance, Lloyd's of London insurance market, which is going to be being made available to crypto users, bringing insurance on chain. That'll be interesting. Look forward to hearing your thoughts on that in a little bit, Funky. Let's go to some of the discussion points on Bitcoin first, because I think this is a few tweets which I thought were interesting to share. And then, as always, we're going to get into the main headlines and a discussion on those. So Tyler put out this tweet yesterday, which I thought was enjoyably bullish, but also just, reasonably amount factual too. So not going like in crazy bullish, but we just wanted to get a sense of how things are moving. He said, wow, I didn't realize how big Q4 typically is for Bitcoin, especially October. Now we have September rate cut all but confirmed. Just on the rate cut stuff, so because obviously crypto historically has been very, very correlated with rates. So this is the news coming out of the FOMC yesterday. No cuts at the moment. And this is a commentary from Alex Kruger. No cuts coupled with a slight dovish twist as expected. This is more priced in than a holiday sale after Thanksgiving. Think Powell will be just as dovish in the Q&A while brushing aside questions from recession mongers. So it feels like they definitely don't want to commit to it at any time soon, although the market just really, really wants to price it in / is pricing it in, I think, according to a lot of people's thoughts. Sam, before we get into the Bitcoin stuff, any thoughts on the rate stuff? Is it entirely priced in? Do you see it as pretty much inevitable that it's going to come, like, I don't know, towards the end of the year, either just before the election, after the election?
Well, I think it just depends on like how inflation's tracking and money printing and things like that. So I don't know I haven't been paying attention too closely to what the recent FOMC and all the latest ones were. But if you'd assume that inflation targets are 2%, if they were to then start cutting rates because it isn't quite at that, I think it would go the opposite way. So it just depends. I think we touched on this with Ovi last week when he was on. I'm still in the camp that I just don't think these economic levers are working as they're intended, because inflation isn't down to those levels, but yet stocks were at all-time highs. They've come off a little bit, but I do think that it doesn't strike me as being as effective. And this whole swift or curveball to having Bitcoin as a strategic reserve, I think that to me is an admission that fiat currencies aren't necessarily working as they have historically done. And I think if you take a step back, just looking at things like the number of people that it takes to sustain an income for a household, like that's so different to what it was back in the 60s, 80s, 90s. So yeah, I think in terms of rate cuts, I just don't really see how they could do that without the market absolutely tearing.
Well, I think that's the point, right? So I guess it's managing the expectations. It feels like everyone thinks it's going to come for sure, and then that's what they bet. That's why the markets are moving. But the point that I made the other day, which I think maybe the final point on the rates before we get into kind of Bitcoin's historical performance, is that I don't think that the way that rate cuts are communicated has changed over time. Like, I think, remember when the Bank of England had Mark Carney, that I think he was the Canadian guy who came over,
Canadian.
And he started talking about forward planning a lot. I don't know if this was, taken from US policy, or whether it was where exactly that concept came from. Maybe it's existed even before that as well. But I'm pretty sure that historically before, there wasn't so much of an attempt to communicate with the market multiple months in advance to try to get it prepared for whatever is happening. And so what I feel like, given that they've indicated that there will be cuts and that it's coming, and then they, it's kind of like a crypto founder trying to tell you that the airdrop's coming, but it's not going to come just yet. Oh, but it is coming, so you got to, don't do anything crazy. Like, we are going to give it to you, and then the market starts to price it in, and then they try to take it away from you because the market's going out of control. So it's like it's a bit of a cat and mouse game, which I don't know if people always or used to play as much before. Any reflection on that?
Yeah, I mean, it takes me back to my finance days at uni. I think there's a theory called efficient market hypothesis, and that effectively assumes that all information in the public domain is priced into assets. Now, some markets are more efficient than others, and I think the crypto market is less efficient than the equities market. But I completely agree that if you're then forward planning and you're making these announcements to build those expectations in that there will be a rate cut at some point in the future, I think naturally, like, asset prices are going to be slightly higher than they would be had they not done that. So I think it is probably to some extent priced in. But I guess it does come down to general consensus and who those key players in the market are coming to that consensus with. Like, if you've got sophisticated investors with all these models that are trying to do that then are market making to a certain price, then that's probably a more accurate reflection than your average Joe, like retail investor that holds crypto assets that is going off an announcement, and hence why you see a lot more volatility in the market. So I think it just depends on the constituents of that are in the market. And I think as institutions come in with ETFs, I think that will become a lot more efficient, and it will effectively price that in a lot more effectively. So yeah, 2-3 years from now, probably very different to what it is now. But I still think that the crypto market is somewhat inefficient at the moment.
Yeah, I kind of agree on the idea that the traditional market is probably very efficient on this type of stuff now. And I'm not an expert on those markets because I didn't really ever trade them before. But when you look at something like Nvidia, which has just gone completely insane, maybe as part of the AI bubble as well, which potentially is a mini bubble, which could be coming to an end at some point. you've got to think that a lot of that is kind of pricing in all of this future stuff that is expected to happen, albeit with a little bit of an AI twist, with that bubble accounting for some of the gains. I wanted to share this more specifically about, for later in the year, talking about the Bitcoin price. This tweet shared that, like clockwork on the liquidity cycle, it appears the huge bull market begins perfectly in sync with the Bitcoin clock in October. So there's a couple of interesting charts. One is this one for the people who are just watching in and not, sorry, people who are just listening in and not watching. You kind of have all of the halvings plotted out, and a few months later, typically the price of Bitcoin goes up fairly aggressively. The point being, in Tyler's original tweet, that October is always a very historically good year, a good month for Bitcoin. And you can see in previous years' performance, in 2023, Bitcoin moved 28.5% in October, 2022, 5%, 2021, 40%, 2020, 27%, 2019, 10%. You have to go as far back as 2018 before October was a bad year, down only 4%. 2017 plus 47%, 2016 plus 14%, 2015 plus 33%. So that's like, I think from what I can see here, it looks like October and February. And again, I don't know how much you should be reading into these kind of charts, but it does look like, from historical data, October is a good month. February is also a pretty good month. But interesting to note, how we talk about the summer being, everything's going to be quiet in summer, everyone will come back and buy everything in September. That is not what this chart indicates. In terms of September kind of historical Bitcoin price action, you have Bitcoin up 3% in 2023, down 3% in 2022, down 7% in 21, down 7% in 20, down 13% in 19, down in 2018, 5%, down in 2017, 7%, small gains in 2016 and 2015. So I thought it was interesting from two sides. Look, and this is with the caveat, I don't know how much you can read into all of this stuff all the time, but October was definitely better than September. And I thought that was an interesting observation, given that so many people seem convinced that once the summer is over, then we can kind of get back to business in some respect. Reflections on this data, Sammy, what are you thinking on Bitcoin historical performance and how it might relate this year?
Yeah, I mean, I think there's definitely a certain amount of seasonality, but I do also think that there are structural changes this year that we haven't experienced before. So the whole ETFs, like that institutional inflow. So I think if you overlaid that with a stock market performance chart, like a similar thing where you look at, I don't know, the FTSE or the NASDAQ or whatever it might be, I think having a look at that might be a better way of, or at least combining that with what we've had with Bitcoin previously, might be a better way of predicting what's going to happen going forward. So I think just examining what's happened previously, because we've only got, this is a fourth halving. So so there's not that much experience around that. But I do think there is a certain element that you've got this hard-coded like reduction in supply for Bitcoin. So there is going to be that every 4 years. There will be a certain amount of price action that is correlated to that. But I do think that the institutional stuff is something we're yet to kind of experience properly. So we could end up seeing a really bullish next couple of years that completely throws that heat map off.
Yeah, I think that's a very fair set of points. One question for you, more just an opinion more than anything else. We had this tweet going out on Bitcoin dominance. We had this tweet here: Bitcoin dominance at its highest level in 3 years. ETF flows fundamentally altering market dynamics. No longer do BTC gains cycle into alts and the longer tail of crypto assets. So there's an interesting chart here where it shows Bitcoin dominance going up to as high as, I think it's 52.7% this past week. That's provided by the block. What are you thinking on Bitcoin dominance this time round, Sammy. Like, obviously, there's more coins than ever. There's more asset classes than ever, with NFTs coming up in 2021, becoming a legitimate asset class this time. And now you have meme coins as this new bucket, which is attracting a lot of attention and capital too. Do you think people take their gains and kind of go further down the risk curve, or do you just see the ETF structural change, meaning that Bitcoin is, going to continue to grow in dominance?
Well, I think dominance depends on a couple of things, like the overall market cap of crypto generally. Like, say, for instance, you have a shit ton of institutional inflows for Bitcoin, then yes, dominance would go up significantly if the market cap, the entire crypto market, remains the same. But if that goes up as well, then you'd have a similar level of dominance. So I think it just depends. And I think there will be certain altcoins within that total crypto market cap that, say, for instance, the whole level, sea level rises, and Bitcoin's dominance still rises. There probably is going to be some sort of second and third winners that do extremely well as well, more so than they have done in historical things. But because the whole crypto market cap has risen as well, I think we'll probably see a mini altcoin season probably be less pronounced as it has been historically. And it might just depend on certain themes and metas that kind of come through. But yeah, I think the market dynamic has changed. So I don't think we're going to see it in a way that we have historically. And when we spoke to a couple of the people last week that came on the show, I think they were very much like, okay, we need to get more exposure to Bitcoin. And I think I do agree that those structural changes kind of lean into the fact that Bitcoin is the golden goose, but I think there will be other altcoins that perform well as well. I think you just have to be a bit more selective this time around.
Love it. Appreciate the perspective. Obviously, this is moving into the more kind of personal opinion. How are we feeling about the various assets? Lots of better, more respected assets available now to us. It's more just how do we see this moving? Funky, resident Bitcoin. I would almost say maxi, but I know you've got more stuff than just BTC. What's your thought on this dominant stuff? I think that's what you wanted to come in on. Welcome to the stage, my friend.
GM fam, yes. I mean, I think that this is what we're seeing is a shift in the market dynamics. I think this is something that people have readily accepted for the last, 6, 7, 8 months since the ETF launched. David, the founder of the Kingdom, for instance, former TradFi guy, same thing. He has the same position. Like, fundamentally, we're seeing an alteration of the market structure. I don't think we have true retail participants. We don't have, things that we've talked about on the show before, the stimmy checks raining from the sky and people bored during COVID coming in and just trying to gamble away their savings on alts and so on and so forth. So all of these things are having an impact. I feel as if we're going to see dominance continue to climb to at least 60%. I don't know if we'll ever see a true kind of alt season in the same way for many of the reasons that you guys just mentioned. There's far too many coins. I really love, and you guys know this, I've shared this in the Modern Market Discord on Twitter, Redphone Crypto, sort of the old school Bitcoiner who has made some really interesting prognostications. And I think with the TradFi group coming in, they're going to look for not only Bitcoin, but probably some of those tried and true DeFi protocols, MakerDAO, Aave, probably really interested in the whole RWA narrative and so on and so forth. So I just don't feel, and I really do think, and it's partly because of my wife, Erin, she is definitely the Bitcoin maxi out of us. Every time we see our alts wilt a little bit more, she's like, we could have had more Bitcoin. So I really do feel as if after this particular cycle, we're probably going to significantly consolidate. I mean, Bitcoin probably already represents 30 to 40% of our portfolio. It'll probably be much, much higher after this cycle as we reposition back in for the future. It'll probably be even more Bitcoin acquisition. I just feel like it's such a dominant thing at this point, and this is what TradFi is looking at. They don't really care about the alts. They don't really care about even ETH at this point. So I think that we're just, almost like if you rewind the clock to 2021, where everybody's like, oh, institutional adoption is going to happen. It didn't really happen. I think 2024 and 25, we're starting to see that, but for Bitcoin mostly and for ETH to an extent, I don't think, a lot of the prognostications that are coming up about this cycle, I think are probably going to be delayed for another cycle. And people got to build useful products. I mean, there's something to be said about there's been no innovation at all in crypto, basically since the smart contract. And Ethereum is now 9 years old. So we're just seeing a lot of degenning on the meme coins. The best strategy, obviously, was just having a bunch of Bitcoin and just meme coins, and then probably rolling your profits into Bitcoin so they don't melt away. So it's just an interesting dynamic. I feel like it's just going to continue to surge in terms of the dominance, and we're going to. We will have some kind of all season, I think, but I don't think it'll be muted compared to some of the things that we've seen in the past, I believe.
Interesting perspective. Definitely want to kind of canvas different people's takes on that as we kind of proceed through the rest of August, to be honest, because I just enjoy hearing different people's perspectives on this very thing. I think Bitcoin's roadmap is kind of adjusted with Solana coming in, doing exceptionally well, taking the majority of mindshare at the moment, and ETH having all of those man hours. It does feel like each has a fairly unique proposition, but they're also doing, they're still busy doing more things. It's not the best point that I've made, but so let's just get into the next thing. Appreciate your take, Funky. Let's get into this Tether stuff, because this is what I was really wanting to get into today. Tether, as we noted already in the headlines, have made reported $5.2 billion of profit in the first half of 2024. And so here's like a bit of the breakdown. We did some of the breakdown. We'll just do some of the breakdown again, and then we'll get into what the founder described as a once in a 100-year opportunity. So they had $1.3 billion in net operating profit, $520 million increase in Tether's group owned equity, $5.3 billion in excess reserves, and saying that they now have more exposure to US Treasuries than Germany, the UAE, and Australia. And on the list of all the countries holding Treasuries, they are now 18th. So that is 80,000 Bitcoin owned by Tether's group. This is what the founder had to say on the 100-year opportunity, because I think, when this entity has accrued so much Bitcoin, so much power, so much also not just power because of the wealth that they hold in Bitcoin, so much power in the sense that they hold such a huge amount of US Treasuries, which makes them very influential, and from that perspective too. So I think it's very important to understand what they think this specific opportunity even is. So this is what they say. Tether's primary goal has always been to create the most solid, stable, and resilient stablecoin. Our attestation data shows our company's commitment to this endeavor. Tether's management, in fact, decided to keep $5.3 billion in excess reserves as part of the stablecoin reserves, on top of the 100% reserves that are backing all issued tokens, to further protect USDT's global user base. The $5.3 billion could have been distributed as dividends to the shareholders, but they were not. Tether's management and shareholders believe in building fair access to financial services, especially for those people that have been forgotten by the traditional banking industry, simply because they are not profitable enough as customers. In many countries, people live on less than $10 a day. They don't have the luck of having 2 bank accounts, 2 credit or debit cards, and other payments and saving methods. For this reason, keeping a significant part of our profits in the company is our way to support our users and thank them for the trust they place in us every single day. Tether also announced, so this is interesting to note, also announced recently how outside of stablecoin reserves, the group has accrued an investment portfolio of $6.56 billion. This capital is not managed as a classic VC fund. Tether invests only in companies and technologies that are aligned with our fundamental company mission, which is to disintermediate, build for independence, build for resiliency, build for the future, and build for the apocalypse. And they give 2 examples of 2 example investments that they've made. One is artificial intelligence, and the second is in biotech. So, and then their final message is this, just them expressing how much they realize what a crazy situation that they're in and how much money that they have at their fingertips. And so kind of expressing that they know that they're at this kind of unimaginable level and they're going to try to take advantage of this opportunity. Sam, that's the key bits of information from this. I think it's really, really important to understand when an entity has this much Bitcoin and this much exposure to US Treasuries, and then has a very influential arm on an investment side, to understand what their perspectives are. what are your key takeaways and thoughts when looking at the Tether business model?
The first thing I would do is look at the risks. Now, you've got to remember that the past couple of years we've been in a bit of a bear market. So if people, I mean, a lot of people would have been holding their assets in like stable coins. Like stable coins went through the roof. So their business model has been reliant on that. And I think sometimes bull markets can be short and sharp, and obviously stable coins are always going to be used when crypto's around. But I do think that how they manage their assets going forward is also important. And like you said, they seem to be holding Bitcoin. They've also got 3.8 billion of gold on the balance sheet, which hasn't come to light. So they're actually quite well hedged. But if you look at their business model, I think that the biggest risks are going to be, what was I going to say? So like liquidity risk. So like if all people decide to redeem the tokens, like Tether, the USDT at once, then there's going to be a run on their assets. And do they have that liquidity? And that's always been a challenge historically, because it's not liquid assets. Some of those assets they hold are locked up for like a year, so it's not 100% liquid. So I think I would look at those risks, making sure that they've got enough reserves on the balance sheet to be able to repay those if they need to. But yeah, I think the business model is obviously very lucrative. They make a significant amount of revenue and profits every year. Their operational costs are extremely low. I think they've got like barely any staff for the amount of revenue that they generate. So it's an insane business model. I think the only concern is you look at the US regulator as well, what they did with the BUSD. They kind of brought a class action against it, and then just like dismissed it. But by which point, within that time period, everyone had moved their money out of BUSD, and it completely crushed the business, so the Paxos. So I think there is a regulatory risk around that. So it's something that I'd be watching closely in terms of the business model.
Do you know why I think there's no regulatory risk here? Because they own so many treasuries. Like, I just don't think you can go after. I mean, maybe you can actually, but my instinct is like, you can't go after someone who holds all your treasuries in that way. I think it's
definitely having a vested interest in the US government is probably a good thing as well. But I think there is existential risk. But I think if those black swan events, in terms of like a massive like Terra Luna event, or like a run on trying to redeem your stable coins to get it into fiat, or something like that might happen, then there's probably bigger concerns.
To that point, I know a lot of people and knew in the comments on Twitter brought this up. Well, he didn't bring it up, but I'm reading between the lines. Said Tether is the black swan, and I know for some reason, and I'm definitely not the expert on this, so people would need to correct me if I'm wrong here. This is one common position when it comes to Tether, is that they're not being transparent, and that they're not telling people the composition of their treasury, where the money is. But the thing, when I've looked, I've always just seen some. I've seen the accounts. I actually looked at them last year, I think, when they announced them. Okay, fine. If we're going to accuse those very accounts of being fabricated or untrue, then I guess that's the next accusation. But from what I can tell, these things are actually published. You know how much is in treasuries. You know how much they've bought with Bitcoin. They've bought Bitcoin. You know how much they're holding in liquid cash. So I don't think, based on the things that I've seen, that criticism is valid. Now, is it accurate? That's a different question. I can't speak to the accuracy, because I don't know. No one can speak to the accuracy if something is getting stamped as saying audited and confirmed, and then it's not that. Well, okay, well, no one can guess that, right? You can accuse anyone's accounts of not being accurate based on, I don't know, whispers or unclear information. So any reflections on that stuff, Sam? I've actually always thought that, look, Circle is the darling of this. Well, it's not the darling of the States, because the government's always waging some type of war against crypto, but it is the American company. And I think USDT is certainly more widespread in the East and in other places. So is there like a geographical battle going on here? Like what are you thinking?
I just wanted to raise a point around the audit report. Like, I think a lot of
Sure.
people just see the sign off from BDO, but if you actually look at the auditor's report, it's a so an ISE E3000 revised report. So it's not like I don't think it's like a full audit. I think that's a review engagement, and there's a huge emphasis of matter on so many different points that what that basically means is the auditor is drawing your attention to specific parts of the accounts. Now, they haven't actually published the full financial reports yet, but this is just the summarized, the consolidated financial figures and reserves report. Now, it depends on what level of detail like BDO have gone into, and they've obviously got some emphasis of matter, which is kind of drawing your attention to these areas that potentially aren't typically aligned with typical accounting standards or auditing standards, that you just need to pay attention to when you're reading the report. So that's just something that I would probably reference, because I think people just assume that if there's an audit report, it's fully audited, we can rely on the numbers completely. But I think sometimes you have to take it with a pinch of salt, especially if there's like caveats in there.
Sure. But I mean, that's the kind of thing that I think every report, you need to know the technicalities of it, and you need to be completely, I mean, I feel like you got to take every report, especially in this industry, with like a little bit of a pinch of salt. But I felt like the criticisms of Tether in particular were like, oh, you don't know anything about it. And it's like, there's loads and loads of numbers available if you wanted to check. Funky, your hand is raised. What's your thought on this? Obviously a fantastic business model for Tether. They are absolutely printing. What's your thoughts on the strategy to just keep buying Bitcoin instead of doing anything else? And any other thoughts here?
Yeah, just real quick. I mean, I was going to say 80,000 Bitcoin. I mean, the Tether FUD is so 5 years ago or 2021, even in that cycle, people were like, oh, because I remember at the time, if you guys rewind in your memory, the big fiasco about the Chinese commercial real estate and how they were building all these empty cities. And one of the accusations that was often levied against Tether was that they held, quote unquote, like 2/3 of their value was in commercial paper. They weren't as open and transparent as they are now and as forthcoming. So I think that now that we have some of these reports that are lending some transparency into their holdings and so on and so forth, the fact that they're moving forward with the gold-backed stablecoin, and I feel like it's only a matter of time before we see a Bitcoin collateralized USDT. Tether dominates. The reason Tron is doing so well is because of the Tether inflows and just how much there is being used on that network. So I think it has a lot to do with the fact that it is primarily something that we see in East Asia, which is a massive, agglomeration of people. And if they're using crypto, they're using Tether and everything else. I'm not worried about Tether at all. But personally, as an American, I pretty much only still hold USDC because I feel like they've had a legacy of having these. I forget which big auditing firm does it, something with Graham in the name maybe, but they used to do these monthly attestations about how much they actually had one-to-one cash versus with the USDC in circulation. And then just one last thing, Legendary had a tweet yesterday where he showed it. I think Sammy made the point that there's very few people, like 42 is the entire staff. And the amount of value that those people generated just by being part of the Tether company was insane.
Yeah. I mean, that final part is definitely true. Also, I just think it's an interesting strategy that I wonder how many other teams who became profitable. This is the temptation, and this is a final point on this. Then we're going to get into the Web3 roundup and hit maybe one or two of the other headlines. The temptation in this space, and this is more personal point of, when you make a little bit in the space, the temptation is to become a VC. I don't know what it is. I don't know what it is about being called an angel or like seeing your name in those announcements and then everyone says, oh, congrats, so-and-so's raised X number of million and, you're a part of it. Maybe it's the former gains. Maybe it's something about the status thing. There is definitely a temptation in this space because we went through it at the start of this year on an individual level where you kind of want to be the angel investor. You want to be able to pick which things are going to win. Like the idea that you get to you're able to pick what's going to win is like such a fun, well, it's both fun and powerful. It's a powerful concept that you can get consumed by. And I think a lot of people, including myself, I will end up losing a reasonable amount of money from some of these investments, not because they're necessarily bad investments, because like the timing was bad or the valuation was bad, or, you know, it depends on a variety of things, but because I got overexposed to that feeling of like, yes, I'm an investor and it feels good to participate in this way, rather than just buying Bitcoin, just taking your profits and putting it into like the safer, high, the gold standard assets for whatever reason. Sam, a final reflection on that from your perspective. I know you've done a bunch. Do you think I'm speaking out of turn? Have you experienced that at all before we hit the other final headlines?
Well, I think given that we spend much of our time in this industry, I think we have a competitive advantage over, say, investing in stocks or
That's
like
true. That
bonds or other asset classes. And because we kind of we're reporting on the news all the time, we're kind of digging into researching. I think that we have a good sense on certain projects. So I think investing, I think yes, there will be bad investments, but I also think there will also be good investments based on our understanding of the market and where we're at and stuff. So yeah,
True.
I think there'll be both winners and losers.
Thank you very much for sticking up for us. I was going on a little bit too aggressively on us then. No, I agree with you. Actually, the competitive advantage thing is true. And when I did consider taking some funds and like going elsewhere, that's actually the point that kept it in the market, because like, well, this is where the competitive advantage is. Yes, I'm going to take some off for other stuff, but in terms of investing, like this is what we do every day, right? So agree with that very much. I think we'll get into one or two of the final headlines in just a little bit, but let's hit the Web3 roundup to get you up to speed with everything else that's happened in space in the last 24 hours. Going to share it on the screen for the people who are watching. Remember, we're live on YouTube and on X video as well. So number one, we have, as we mentioned already, Memecoin's going down across the board on the day. WIF is down 13%, Pepe down 7%, Mog down 12%, Popcat down 14%. Nero and ETH seems to be the winner for the Nero Dog coin, up 60% to $180 million market cap. Number two, Bank for International Settlements and the Bank of England launch Project Pixtrill to track stablecoin ecosystem. They've developed a prototype data analytics pipeline, which can provide supervisors with near real-time data about stablecoins, liabilities, and assets that back them. That's interesting, given the conversation we just had about Tether. Keep an eye out for that. Open Eden Labs to bring US Treasury bills on chain to XRP, and Ripple will allocate $10 million towards it. These Treasury stuff, all of this stuff's going to come on chain. That's going to be pretty interesting to see. Van Eck releases a report with $1 million Bitcoin and 50K ETH bullish case price predictions for 2030. I'm telling you, these traditional guys are coming in and just writing the most outrageous reports. Like we wouldn't even have any people would laugh at us if we wrote this stuff, but look, it's coming from them, so might as well be bullish. Memeland introduces N-Meme, a way to stake your NFTs instead of your meme tokens. Trump launches a $499 set of shoes branded with the Bitcoin stuff on it. They sell out in 2 hours. And finally, PacMoon. Remember PacMoon on Blast? They completed their final airdrop, which is pretty good for the creator economy on Blast, which I think has probably been struggling a little bit since the Blast TGE, but I think there are still a core group of people who are participating, Sammy being one of them, on the Blast side of things. So that's the Web3 roundup, Sam. We have a couple of headlines left. I think we've got to go to the Matchy thing first, just to give people an understanding of what's happened there. And then we'll try, I don't know if we'll have time for the insurance stuff as well. So the TLDR provided by none other than our good friend Bread is this. I'm showing it on the screen for people watching. Dug into Matchy's new BAYC setup. Here's the TLDR. It's a simple fractionalization contract. So you deposit one Bored Ape and you get to mint 100 million BAYC tokens. The total supply of the token will oscillate at 100x of the total apes in the contract, which is currently 26. He said, worth noting, because the cost of withdrawing an ape is hard-coded in the contract, it means there will invariably be some ape locked in the contract forever as tokens are lost to DEX games. remember we also pointed out there was this interesting thing that happened right at the beginning, which was very noteworthy, where Cyrus said at the beginning, a trader bought 2 Bored Apes off the floor and sold them into the new protocol's liquidity pool for 48 ETH profit in 5 minutes. So that was probably not intentional. But now we have these basically fractionalized Bored Ape tokens trading. We have them here. We've got, I think there's a token on ETH that I've found, and there's also one on Solana. I'm showing it on the screen. So, Sam, what are your thoughts on this? The fractionalization of the Bored Ape NFTs. There's been no official word from the official team on this, and I don't know if they will ever comment on this type of thing. What are your thoughts?
Well, I mean, it's very similar to flooring protocol, where you locked up any NFT into, and then you receive those mu tokens back, and you could effectively swap it out for another floor, I guess BAYC or whatever pudgy. So I don't think it's anything new, but it's just interesting that it's been spun up so easily. We've seen it on base with the mutatio, so the XCopy pieces that could be converted into the Fly token. So there's been a number of instances where this has happened before. I'm just curious as to the intentions, and I think with Matchy there was the desire to kind of try and reduce the supply or circulating supply and help with the price action. So maybe that would, because like Brad mentions, there will be BAYC that are going to be taken off the market permanently because we're not going to have enough tokens in circulation to redeem them. So yeah, I'm just curious as to the intentions and how this plays out.
Yeah, I don't know. I as you say, it's kind of on some level, it's kind of been it's already done, right? As you said, Flooring Protocol have been able to do this. I know Flooring Protocol right now, as things stand, I think they might have just announced something today on V2, but the initial vault system is actually not working at the moment. So even if you had any tokens, which I did actually find some the other day, I had some Captain's fractionalized tokens, and there's no liquidity for those right now because basically the whole system is shut down. So maybe this is the alternative for the moment if you wanted to participate in a fractionalized Bored Ape economy. But my understanding is Flooring is going to come back live, and they have more NFTs and tokens than just Bored Apes. They have Bored Apes, they have CryptoPunks, they have Pudgies, they've got Captains, they've got Azuki and things like that too.
It's also very similar to it's almost like one step back from the 404s. The 404s are kind of baked into the contract. So you convert it to the liquid tokens and then back to the NFT. I think Tyler also put a post out about, I think that they should be kept separate. Like people don't necessarily want to liquidate their BAYC into fungible tokens. Like they want to keep them as NFTs to then have them appreciate in value as like a collectible. Whereas like meme coins are kind of separate. Like you kind of trade them. It's almost like a pure form of gambling, trading attention. So yeah, it's just interesting to understand different perspectives around like, should they be like fractionalized? Is that actually healthy for the market?
It's interesting, and this will be the final point that we make today, I think, or something like that. It's interesting how you called it a meme coin, and actually that was the language Matchy used, whereas Bread called it just a simple fractionalization contract. And I think Bread's description is accurate. That is technically what it is. And when all of those other tokens before were created via Flooring Protocol for all of these NFT collections to allow you to fractionalize them, there was no language about them being memes, right? It was just, this is a fractionalized token. It represents whatever proportion of the main asset that you hold. Whereas in Matchy's post, he said, for too long, apes have desired to play in the meme coin swamps. Today, your fellow apes at ApeFi have made this possible. It's a new meme coin that is fully backed by Bored Ape NFTs. Go to ApeFi and mint 100 million Bored Apes. So clearly, like, trying to participate in the meme coin thing, even as you say, I don't think it necessarily is categorized as a meme coin. It is a coin, but I don't think that necessarily makes it a meme coin. And I guess, are you thinking as a consequence, this is just, it's going to be tied to the NFT value, right? It's not going to trade higher or have the capacity to go higher like another meme coin would.
I don't. Well, I think I used the term stock split. So like you look at the Tesla stock split, when that happened, it kind of rocketed in price because you reduce the unit price of that particular stock, so more people can buy in. And I think that's what that effectively does. It means there's probably a lot of participants in the meme coin market. So naturally, more people are going to buy up that, and then maybe someone might want to redeem it. But I think naturally it's going to end up being at a higher price in the fungible token market until there's no interest, in which case it will plummet. And my concern is that then, because that's tied to the Bored Apes, you might end up seeing a bit of that trickle down on the Bored Ape side. So I think you kind of you entwine. I know. I get your point that it's kind of, you can redeem those tokens for the NFT price if you have 100 million. But my concern is if they become entwined, like they're going to trade in limbo if there's enough people on either side of the meme coin and the NFT. So it then becomes at the mercy of whatever whatever consensus is around the meme coin price and then the NFT price. Like it could become entwined.
Yeah, I see what you mean, but I think the market will just make it efficient, right? Like if one of them, because you have the standing bid on Blur, for example, I think this is what will make it efficient. Because you have the standing bid on Blur, this is whatever the equivalent will have to add up to. And if it's too low, people will buy it up, redeem the thing, redeem the NFT, and sell it into the bid on Blur. And if it goes too high, I guess the opposite. So,
but I think you also have participants that don't want to hold it as a collectible. They're just redeeming it to dump it, and then you dump the price of the NFT side, if you see what I mean. Because the liquidity,
but then it would become too cheap and traders would buy it. And then,
but then it kind of gets back to the whole Blur situation, that if you have enough people that are just dumping it, then collectors aren't going to buy because they're concerned that there might be too many people just holding the token or the NFT to then want to buy it. So the floor actually drops. So it becomes a similar situation with Blur if it becomes big enough. That's just my concern.
I don't know. Fair enough. Good to air the concerns. I don't know if I'm there on that one, but need to investigate it more. Look, that's the end of the show, guys. Hope it was interesting to have a little bit of debate at the end and get into all of those important bits of information that we shared throughout the show. As always, thank you to my legendary co-host, Sammy. Thank you to our contributors up on stage. We had Tiro, Funky. Thank you to our YouTube audience. Got Kashmir, Justefano, Tiro's in here. Loads of good commenters. Appreciate everything that you do. And thank you for joining, as always, in the audience. Have a wonderful day. We'll be back same time, same place tomorrow, 7 a.m. Eastern Time, 12 p.m. BST. Have a wonderful day. Take care. We'll see you then. Bye-bye.